Good afternoon. This is Brian Split with Allendale here on Monday, November 22nd, 2010 with your closing commentary. We did have a mixed settlement in the grains. December corn was down 5.5 cents today at 5.15 1/4. The December 11 contract down 7 3/4 at 4.83 1/4. On the soybeans, the January contract up 20 cents at 12.21 1/2. The November 11 contract up 9 1/4 at 11.35. And on the wheat, we had very quiet settlements today. The December contract in Chicago up just a penny today at 6.45 1/2. The new crop July 11 contract unchanged at 7.20 1/4. Overall for the corn market, we did retest the uptrend from the June lows. Had a low of 5.11 3/4. Last week's low being 5.09. The funds did sell approximately 15,000 contracts today. We had export inspections coming in a little bit less than anticipated. That may have weighed a little bit on the market. And one thing that we are going to look at here is we do have options expiring on Friday. The two highest open interest targets going into Friday's trade would be the $5 strike price and the $5.50 strike price. So assuming that this market stays under 5.20 short term, we may see a quick push down to $5 as we approach expiration. Otherwise, if we can see a little bit of buying in the next 2 days, then that $5.50 strike price may be a target for Friday as far as expiration. On the soybeans, we did have the funds buy approximately 5,000 contracts of soybeans and 2,000 of both meal and oil. And dryness in Argentina is being cited as one of the reasons for the late rally into the close. Again, we did have export inspections, a little bit less than expectations, but overall the soybean complex does appear to have some stronger fundamentals at this stage in the game than the corn and the wheat market would. On the wheat, we actually had the funds buy 3,000 contracts of wheat. Dry weather is still being cited as supportive to the market, and we can say that the lack of rallying in the corn market probably kept this wheat market capped today. The trade is expecting about a 1 to 2% decline in the crop conditions on this afternoon's data. Moving to the meats, we did have fats down 52 in the December contract. We do still have a large premium in the futures to the cash market, and that is also in conjunction with weak equity trade causing the lower settlement. We had Friday's cattle on feed report was seen as neutral to slightly negative, but we are seeing some underlying support from the actual beef market, with choice box beef up 202 on Friday, which was the highest since October 29th. On the cash, we did trade steady today. Hogs up 27 in December. Again, we had steady to weak cash limiting the rally, and again a premium in the futures to the cash is also limiting these gains. The stock market is also going to be providing some influence again on the meats, just a way to potentially try and gauge the meat demand from the general public as we continue on our economic recovery. And with the equity trade in mind, we are looking about, well, right now you've got the NASDAQ higher, and the Dow only down about 30 to 40 points right now. The S&P down about 3 to 3.5. So we are off our lows quite a bit. That's about 110 points off of our lows in the futures for the Dow, and about 12 points off our lows in the S&P futures. So last night we had higher trade. We actually opened up in the futures market above Friday's highs in these equity contracts, only to be mid-session trading below Friday's lows. So that was a potential key reversal on those charts, and really the way it played out is we had Ireland apparently get some kind of a package approved. That was what caused the higher opening overnight, but fears again coming back here that we are going to have other countries that may need similar help, and that is going to continue to weigh on the big picture outlook. But these are the same countries that we were talking about when Greece was going through their trouble, so this is not new news, so to speak. It's just, do we have to deal with this right now, or can we put it off for another couple months and buy again in the meantime? We do have the dollar up about 14 points right now. We rejected some lower trade early, again based off of the news about Ireland. That sent the euro rallying at that point, but Again, the euro rally was sold into. The dollar did recover quite a bit, again to trade higher. But after taking out Friday's highs, we weren't really able to extend these gains. So this dollar is still not convinced that it wants to go higher. So far, we're holding 50% retracement of the August highs to the recent November lows. And as long as we're under that, the market may still be selling rallies short term. Other than that, gold did settle at $5.50 higher, but it is currently trading a little over $13 higher, so extending those gains after the close of the pit market. We did have crude oil close 25 cents lower. That was about $1.10 off of the lows. So again, we are continuing to see strong buying support at $80. Strong buying at the 100-day moving average, and again we've got some bullish fundamental inventory data numbers to contend with over the past 2 weeks, and that may be keeping buyers active here at lower levels of support. So that is your wrap up for today, Monday, November 22nd, 2010. If you have any questions over anything we've covered, please give us a call here at the office at 1-800-2MARKET. That's 1-800-262-7538. You can also reach us online at www.allendale-inc.com. And good luck trading to you the rest of the week. And before I forget here, we are closed on Thursday for Thanksgiving trade, so these grains will not have overnight trade on Wednesday. They will reopen for electronic trade on Thursday night, and the markets will close early at noon on Friday in conjunction with option expiration. So there you have it. All right, thank you very much.